please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Early Diwali on Dalal Street as the Nifty trades near all-time highs today, and the Sensex too adds about 200 points to trade near the day's highs. Banks lead the way today while mid-caps relatively underperform.
Bank Nifty up almost 1.5% today after better than expected industrial production data for August. Inflation too remained steady at just over 3% in September.
Tata-Bharti AIRTEL surge on sale of Tata's mobile business to Bharti in a debt-free and cash-free deal. Analysts say that Airtel will get access to spectrum worth 15,000 crore rupees post the deal, and its revenue market share will rise to 40%.
TCS gains after second quarter dollar revenues meet expectations. Margins spring a pleasant surprise. The management expects demand recovery in the near term. Tell CNBC TV18 they will have some insights on BFSI demand by the third quarter.
All eyes on Reliance Q2 earnings today. The stock is up 1% today as analysts expect the heavyweight to report its 11th consecutive quarter of standalone earnings increase. Focus will also be on RelJio's reported numbers. Hello and welcome to Business Lunch. I'm Nisha Podar, and with me as always is Mangalam Malu. Mangalam, good afternoon. And it's festive cheer on the markets already, it seems. Look at Dalal Street rocking today. Nifty comfortably above the 10,150 level. Sensex gains over 200 points in the trading session. And mid-caps, they also in the green, but really playing the catch-up game with the frontline indices. What's really leading from the front today is Bank Nifty way above 1%, 1.3% up in trading session. Let's also pull up the market breadth, and that is also looking healthy for the rest of the day as well. Take a look at that particular advanced decline. In fact, gains were much higher earlier, but in the last 1 hour of trade, that particular breadth has narrowed down. Mangalam.
Absolutely. That's because the mid-cap index is underperforming. But the good part today is that the Nifty is surging as we speak, virtually closer to the high point of the day, opened with a gap, gained and held on to those gains. The best part is the Nifty Bank. That one led the gains. Nifty's nearly gained almost 500 points from the September 28 low of 96.88. Let's see in the second half of trade, can we see another rally and another knock towards the door of all-time highs? And why the Nifty Bank leadership is important, and that's because until yesterday, Kotak, HDFC and Axis Bank were the top contributors to Nifty. Today they are contributing. The next plate, more important, ICICI Bank and SBI. Together they account for about 23% weight on the Nifty Bank. Until yesterday, they were dragging the Nifty Bank by about 124 points, and today they are making good, adding about 120 points to the Nifty Bank. And that is what happens when all players in your team are firing. So that is what the Nifty Bank is doing. Now the key trigger for the Nifty will be Reliance second quarter results. Jio's performance will be important. And as we talk about Jio, the telecom space, that one's buzzing around. Bharti, Infratel, both of them up 12.5% this week. As we speak, Bharti, in fact, is at the high point of the day. So that, again, has extended. The mid-caps, they are underperforming mildly, but that's absolutely okay given the sort of rally that we're seeing in the large caps. And the good part is that smart money, they are writing puts, and how? 10,100 put. Just by now, they've written 28 lakh contracts out there for a premium of 50 rupees. That indicates that they believe 10,050 is going to hold. And then the 10,200 put for about 82 rupees, 9 lakh people have written it. They believe that close to 10,122 will hold. So let's see whether the market holds this, makes a dash at new highs or not. But that will make for an interesting second half of trade.
Oh yes, Mangalam, but let's also look at the global markets where the same euphoria really exists there. Well, markets in Asia were mostly higher on Friday despite Wall Street's lower close, and as investors really digested the China trade data as well. Greater China markets were mixed after September exports came in below estimates, rising 8.1%, while the imports rose by 18.7% there. Japanese markets, they extended gains this week, and European markets, They opened just some time back and they have opened higher today. So green there, but FTSE CAC has just slipped into the red as investors really monitored the fresh economic data as well as earnings and also speeches, remember, coming in from the central bank and policy makers there. So investors will also be watching out for the stalemate following the 5th round of Brexit talks in Brussels this week. Meanwhile, later today, US President Donald Trump is expected to outline his policy on Iran, with critics really concerned it could risk the stability of the current nuclear deal. So all those political data points also weighing on the markets at this point. European markets are mixed. Mangla.
All right, European markets are mixed, but one stock which is gaining as we speak is Tata Motors. That one's up about 1.5% as we speak. And let's move on to a CNBC TV18 exclusive now. We understand that the company has unveiled a mega product pipeline with select vendors in Pune to launch 12 new products in commercial vehicles as well as passenger cars over 3 years. Ronanjoy Banerjee is getting us all the details now. Ron?
Well, we had N. Chandra on our channel very recently, and he did make it very clear that Tata Motors will be one of his top priorities. In fact, he took pretty much the same message in a roundtable with a select set of vendors that took place on the 10th of October. So therefore, just a few days back, where the company, as you rightly said, announced a mega product pipeline. Over the next 3 years, till 2020, Tata Motors is looking at launching at least 12 new products across the passenger vehicles and the commercial vehicle segment, and they are eyeing a double-digit growth. So let me just quickly take you through some of the details we have at this stage. As far as passenger vehicles are concerned, Tata Motors has said that they are going to be launching 6 new cars over the next 3 years. So expect 4 new products, 2 new cars every year from Tata Motors over the next 3 years. Along with that, another 6 to 7 new commercial vehicle products, where the idea really is to try and enter and be present in segments where Tata Motors is not present currently. Because as we all know, Tata Motors has lost over 10 percentage points in drop in market share over the last 12 to 15 months. That is what the focus of this is going to be. As far as the 6 new cars are concerned, this is going to be, primarily in the hatchback segment, in the mid-size sedan segment, in the compact SUV segments. And so therefore, the whole idea was to give a very buoyant, a very bullish commentary by the Tata Motors management to, in an effort, really to, try and lift the spirits of the vendors who've been very patient with the company for quite some time now. But what is important is, as N. Chandra said, that apart from Indica, every single model at this point in time is losing money. As far as this new product pipeline is concerned, the focus is really on optimizing costs, because these 6 products will be launched in 2 new platforms. And another small bit of information which is also very important, Tata Motors in this presentation also announced to the vendors that they will be bringing down their overall Tier 1 vendors to just 300. Currently, the Tier 1 vendors is 1,100. So the focus is on bringing down costs, but at the same time looking at a mega product push. Officially, though, the company declined to comment.
All right, Ronanjoy, thanks so much for getting us all those exclusive bits of detail. But one point here that I would make is that, the new leadership at Tata Group is taking up each issue one by one. Now, with Tata Tele pretty much sorted yesterday with the deal announcement, Tata Motors is next on their radar. But we'll slip into a short breather and we'll come back and focus more on that big transaction that was announced yesterday and the stocks that are buzzing at lunch.
Welcome back. You're watching Business Lunch, and as we speak, it looks like a trend day on the markets because the Nifty and the Nifty Bank, both of them are at the high point of the day. And what is good to see is that the Nifty Bank is leading that rally. That intraday chart should come up for you. What is contributing the most to the Nifty Bank right now is ICICI Bank, undoing the lot of dragging that it has done over the last few months. So keep an eye out on ICICI Bank. That one is taking the markets higher. And for the Nifty itself, Tata Steel is adding further. Talking about Tata's earnings season is upon us. Another Tata Group company, the IT bellwether TCS, that one has kicked things off on a positive note with the second quarter earnings beating expectations. Here are the key highlights. One, dollar revenue and revenue growth in constant currency are bang in line with the expectations. Profits also saw a healthy 8% growth, beating expectations. We spoke to the top management who are optimistic of maintaining the growth momentum going ahead. Not just that, they're also hopeful of the retail business turning the corner in the coming quarters.
if you look at our year-on-year numbers, the best part of this quarter is that finally, after a series of declines, we are seeing the year-on-year number tick up, right? And that has been a turnaround on that. We definitely hope to maintain that momentum into Q3 so that we see improving year-on-year performance. And that is the first target for us. We think that retail will deliver growth which is higher. Yeah. And typically retail has always had a subdued Q3. Given the base that we're coming off, definitely this Q3 will be counter-cyclical for retail. Banking is more difficult to call. And some of the other ones which have been doing very well, if you take something like travel and hospitality or energy or even life sciences, etc., they are likely to exhibit more normal seasonality.
All right, so that was the result of yesterday, but the big result of today is going to be Reliance Industries, and that counter has been roaring away. In fact, is over 1% up and has seen a sudden spike in the last few minutes of trade. So the focus is going to be on Reliance Industries numbers and more than that on Jio's performance this time around that will be disclosed by the company. Varinder Bansal joins us with what can be the expectation. Tell us, Varinder.
First of all, of course, a standard disclosure that Reliance Industries owns the channel you love and watch every time, CNBC TV18. Important is that, there are two parts to watch out for in Reliance results. One is the operational, which is the refining and petchem, and second is the Jio part. As you rightly said, this is the first time Jio income statement will be reported in the numbers. So if you're watching out for refining and petchem, strong expectation this time. Again, remember for the last 10 quarters, standalone numbers have been improving, and analysts believe that for the 11th quarter also the numbers will be good. Refining, why good? Because if you just map the Singapore refining margins, they are up 30% quarter on quarter. So refining is good. Petchem has been strong. In last quarter it was very, very strong. So even this quarter people are expecting it will be good. So important is that what happens, because consolidated numbers will have an impact of the Jio net loss which will come in. So if you're watching out for the net loss number, our poll suggests that the net profit could be nearly 8160 crores, 8170 crores. So that will have an impact of the net loss. Remember last quarter, which is Q1 FY18, there was one-time income also. So, the numbers will look that the reported numbers are lower compared to the last quarter. But you have to adjust that one-time number in the base quarter. So what is Kotak saying? Kotak is saying that the net loss this time from Jio could be 2500 crores. But they also are saying that there could be a break-even at the EBITDA level. Believe me, no one worries about the net loss number for Jio, knowing how much time they have been into operation. But if in any case, there is an operational break-even which comes at the Jio, I think the market will be very happy with that. And that is the important point to look out for. So for Reliance, I'll be watching out for three numbers, which should be on your mind. The first, of course, is the GRM numbers. The poll says it should be $12.50 per barrel. Second is the consolidated EBITDA margins. Consolidated EBITDA margins of a poll suggests 15.4%. Anything above that mark or even at 15.4% will be good. And the third is Jio numbers. Jio numbers, if they are breaking even, or even close to that, it will be taken very well by the markets. And if you're watching out for standalone numbers, the net profit on a standalone basis, quarter-on-quarter sequential basis, we are expecting it to be up by nearly 10 to 12%. So, the standalone numbers are those. So watch out for these three numbers, which will tell you how the results are. And also don't forget that the stock has run up, is already trading at lifetime high, was up 4% yesterday, all these things put together. And the commentary, as always, is the most important thing to watch out for.
All right, the management commentary is the most important thing we'll watch out for in Reliance. Those results likely just after the markets end today. But let's move on to the telecom space. Outperforming today, the wave of consolidation continues, and this time it's the Tatas who finally pulled the plug on consumer mobile business. Tata Tele will merge with India's top service provider Bharti Airtel in a debt-free and a cash-free deal. Nisha Poddar, you have all the details. Tell us.
Yes, thanks for that, Mangalam. First, I want to make one thing clear. Of course, the deal has been really digested by the market, and Bharti Airtel, as was expected, is up over 7%, really revving up because of the kind of win-win deal that it has clinched from Tata Tele. So it's a desperate sale nonetheless from the house of Tatas, because shutting shutting down the operations would have been more expensive, or reviving it would have been a waste of capital allocation for Tata Group. So definitely for them, it is a win-win transaction. What really comes with this is 40 million subscribers and, spectrum in 19 circles. Now, analysts, brokerages and sector experts do suggest that 15,000 crore rupees worth of spectrum is something that Bharti Airtel has managed to acquire through this particular acquisition. And one thing is very clear, it's not a merger, it's an acquisition of the subscribers and the spectrum from Tata Tele of the mobile business by Bharti Airtel. So that being clear, remember that we had flagged off earlier that spectrum consolidation will be the next wave in the telecom sector. Now, what is the Bharti Airtel really putting on the table? What is the cost component for this transaction? And that's precisely the reason why the stock is up today, because it's a very cheap acquisition for Bharti Airtel, considering that they are only taking over 1,500 to 2,000 crore rupees of deferred payment to Department of Telecom on account of the spectrum that has been bought, and nothing else is being paid to Tata Tele. So it is a very cheap transaction for a spectrum, or the bouquet of spectrum, which costs over 15,000 crore rupees. So therefore, Bharti Airtel really looking good. Tata Tele is also revving up because the other two businesses, enterprise, could be really merged with Tata Communications, and the fixed line broadband with Tata Sky. So there is resolution in place. But Tata Communications will be on my radar, because at what cost is it going to absorb? The rest of the business will really define the prospects of that particular stock. So right now, with this whole transaction and the story played out, Tata Communications is the next stock to be watched out for, Mangla.
All right, we'll watch out for that. With that, let's take a short break. Come back, we'll get you some Pataka stock recommendations that came in from our very own market wallas for this Diwali. Stay tuned.
Welcome back, and markets really strengthening their position. In fact, mid caps are also bouncing back as we speak, and newer highs coming in for Bank Nifty, which is really carrying on with the momentum of gains. Let's take it straight to some market opinion as well. And CNBC TV18 caught up with four market wallas, Deepan Mehta, Amrish Baliga, SP Tulsian and Prakash Diwan, and asked them for their top picks for Samvat 2074. Now, here are some stock recommendations that will add color to your portfolio.
EON Electric, this is a predominantly LED lighting maker company, and if you see, they have a top line of closer to about 200 crore. 60% of that comes from their LED lighting makers, on which they have a EBIT margin. I'm not referring EBITDA margin. EBIT margin is closer to about 30 to 33%. If you take a price to book, maybe even if 75 rupees is a book value, price to book is 1.2. On an earning multiple net of cash, it is ruling at a P of 10. While all other consumer durables and lighting companies are ruling at a P multiple of 30, 35. So I think that this is on all aspects, maybe as a turnaround story, the robust business model of LED lighting maker and all that makes the stock very good, and I'm expecting it to touch 130 by next Diwali.
JHS Vanguard is kind of known, but has been on and off most investors' radar for good reasons, because the company was always, a contract manufacturer. It tried getting into its own brands. Even today, it has about 16% coming from its own toothbrush brands, but it really didn't do well. I think it's a company that's on the right track. It has scalability. It has headroom for growth. They also settled a issue with PNG and got some 27 crores. So if you look at financials, they look very healthy. But that's slightly misleading, because there's this 27 crores that's gone to the bottom line last quarter, and that makes EPS look very robust. But if you take that out, it's at about 30 times trailing. A lot of the businesses in that same space are at 50 times.
Net worth of the company is about 560 crores, and that is the market cap of the company. The company is making profits. I mean, at least I expect it to show about 3.5 EPS for FY18. and about 4.8 for FY19. Unless, of course, they end up with a huge loss, then possibly it could be a value trap. Otherwise, I don't see any downside from here. Things work out, it can easily move to levels of 80 or more than that.
TeamLease is a staffing solutions company, And it benefits from three very powerful trends. First of all is the growth in the services business. The services economy in India is growing at a much faster pace than agriculture or manufacturing. And within the services industry, I think there is a great propensity for the players over there to go for staffing solutions, because there's a high degree of volatility and disruption within the services space as well. And they don't want to get saddled with employees which have a long kind of build onto the overheads. So that's where a company like TeamLease comes in and provides flexibility in staffing. So that's one trend, that services are growing, and within the services space, I think there's a great degree of acceptability of using staffing services companies.
All right, those are some stock opinions, but keep an eye out on the markets. Just less than 10 points away from fresh record highs. It's early Diwali for the Nifty. You got to pull up Reliance. That stock has been leading from the front, added almost 30% to Nifty's gains this year, and that stock has moved to the high point of the day, leading the Nifty. And Kotak Mahindra Bank, that one was under a bit of a resting period perhaps in the morning session, and now has woken up, adding to the Nifty Bank as well. Remember, over the last few trading sessions, Kotak Mahindra Bank has been the topmost contributor to the Nifty Bank. Both of them doing well for the markets, a few points away from fresh record highs. We've run out of time on Business Lunch. Stay tuned to CNBC TV18. A very interesting second half coming up only on CNBC TV18.